Today I'll be diving into what the market is basically from scratch. Okay, I'll be explaining what the forex market is and giving you heads on what to actually look into in the forex market. Okay, as we all know, I won't really be going too basic. Okay, I won't really be going too basic. All right, I already have them listed here. I think I'll be dropping this slide after this particular section so you can go through it. If you miss any single thing, you can easily uh, grab them while you are personally learning. Okay, so forex trading is also known as FX. All right, it's also known as forex, foreign exchange trading. Okay, forex trading is an abbreviation of foreign exchange. Okay, it simply means the exchange of currencies. Okay, foreign currencies. Right, the ability for you to exchange one foreign currency against another is simply means that you've involved yourself in forex trading. Okay, forex is also known as foreign exchange, FX, or currency trading. Okay, it's a decentralized global market where the entire world currency trades. Okay, the forex market is the largest, most liquid market in the world with an average daily trading volume exceeding 5 trillion. Okay, all the world combined stock market does not even come close to this. But what does this okay but what does that mean to you? Okay, let's take a closer look at the foreign exchange market. Okay, the forex market is basically a place where currencies are being exchanged. It's like a floor, right? If you want to travel out of Nigeria or out of any country you are in currently, you actually have to convert your home currency or your base currency to another currency. Okay, let's say for instance you are going to the US. Okay, you have to exchange your naira, okay, for the dollar. Okay, now the process of you exchanging your naira for the dollar, or the process by which you exchange your naira for the dollar, is simply called foreign exchange. Okay, you've involved yourself in foreign exchange trading. Okay, and now most of you must have seen the charts of the foreign exchange market, something similar to this. Okay, something similar to this. All right, most of you may find this very confusing. Why most of you must have actually been involving yourself in one or two uh, things on the market. Okay, so what we actually be doing on this market is we'll be trying to explain this market and make you understand the way the market is being traded. Okay, we may not actually be able to give you 100% knowledge on the market. Okay, but at least below average is actually a good start. Right, the rest actually can be discovered personally. Okay, you could take your time and do your research on the market. Okay, learn more and more. Okay, so basically what we'll be doing here is to explain each and every single thing you'll be seeing here, okay, and beyond. All right, so heading on to our chart. All right, so there are opportunities in the forex market just like the stock. Okay, you can trade currency based on what you think its value is or where it's headed. Okay, but the big difference with forex is that you can trade up or down. Okay, just like the crypto now, for instance, Bitcoin. If you are buying Bitcoin, okay, you only buy, if when I mean buy means trading. Okay, when you are trading Bitcoin on the spot market, all right, you actually buy. All right, you buy and hold for a longer time. Okay, uh you can't actually sell Bitcoin. Okay, you can actually sell Bitcoin if you actually doing it in a way whereby when you're not trading. Okay, if you buy Bitcoin, for instance, if the value of Bitcoin start dropping, what you just have to do is to move it to a stable coin, then wait for it to actually appreciate. Okay, but the reverse is the case on the forex market. Okay, on the forex market you make profits either when the market is going up or when the market is coming down. Okay, you make profit in both ways, right? So it's not a case whereby you can say that uh, let's say for instance now the market is coming down, you say you are losing your money. The market is going into a dip. Okay, the market is going into a dip. Right, those of you that have crypto in your Binance or in whatever holding wallet or whatever, your currency may actually be depreciating. Let's see the BTC USD for instance, right? Those that actually were in this market from this point, okay, most of them lost their money, all right? But on the forex exchange market, if you see that the market is actually going to go down, you can decide to make profit while it's actually selling, right? But on the crypto market, once it's selling, it's either you sell off, okay, and make short-term gains, or you hold and lose your money. Okay, that is just what it simply means. Okay, so those of you, I don't know if most of you must have seen those people that are crying crypto is going down, Bitcoin is going down, whatever is going down, is because they don't have the ability to make profits when the market is going down. So the forex market is very liquid, that even if you want to sell at any point in time, okay, at any point in time, buyers are willing to buy from you. People are stationary at every point in time to buy from you. Okay, compared to stock, all right, compared to stock, you actually have to meet an operator, a broker, to actually give you a price, and you may actually wait for a particular period of time for your for your order to actually be filled up. Okay, but on the forex market, everything happens within a period of time. Okay, within as short as possible. Okay, so you don't get to wait too long for your orders to be filled up. Immediately you place an order, someone else in another country, maybe your next door neighbor, may be willing to pick up your order, okay, and fill it up, and you make money while the market is going up, or you make money while the market is coming down, right? It's just as simple as that. Okay, so uh with a market this large, finding a buyer when you are selling and finding a seller when you are buying is much easier than any other market. Okay, like I just explained now, looking for a buyer or a seller at any given point in time is very easy. Okay, all you just need to do is to open up an order. If you want to sell certain amount of your dollars, if you want to sell a certain amount of your pounds, all you just need to do is to open up the order, and it's going to be filled up. Okay, maybe you hear on the news that China is devaluating its currency to draw more foreign businesses into its country. If you think that the trend will continue, you could make a forex trade by selling the Chinese currency against another currency, say the US dollar for instance. Now, what this whole story here is actually talking about is, for instance, now if we say that uh, if we see that if we estimate that the price of the naira is actually going to go up, okay, you can choose to buy naira and hold it, okay, expecting what, the price to go up, and then you sell. Okay, if you see that the dollar is actually going to go up, what you do is you buy dollar and you keep, okay, expecting the dollar to go up, then you sell. Okay, that's just what it simply means here. You can buy and keep, or you buy and wait for short-term gains. Okay, on the foreign exchange market, we have different type of traders. We have those that buy and keep for a longer period of time. Yeah, we have those that buy and keep for a short period of time. Then we have those that buy and keep for minutes. Okay, those that actually they enter into the market, they open a trade, and after 1 hour they are done for the day. Okay, there are some that enter into the market, the whole trade for about 4, 5, 6 days, okay, 7 days for the trade to actually materialize. There are some that enter into the market, they make the whole trade for months, weeks, okay, some years. Okay, so it depends on the kind of trader you are, right? So that's it. So now we'll be looking at the basic forex terminologies, right? So before you can actually understand the language of forex, you need to be able to listen to what it's saying. Okay, you need to be able to speak the language to a particular extent before you can understand every single thing that is going on here. Okay, every single thing that is going on here is a language. All right, the market speaks to each and every one of us in different ways. Okay, the market can actually speak to you technically. Okay, the market can speak to you technically. uh the market can speak to you fundamentally. The market can speak to you through sentiment. Okay, the forex market has its own language, and these terminologies is where the language of the forex market is being structured around. Okay, so we have the pips, we have the spread, we have the bid, we have the ask, we have the volume, we have the lot size, we have spillage, we have going long and going short, We have bullish market, we have bearish market, we have support and resistance, we have currency pairs. And these whole things, when you come to understand them, you get to see that the more you understand them, these are basically the basics, but it actually plays a very long role in your career as a forex trader. So um, if you actually want to take a trade, for instance, now you are expecting your stop loss to be somewhere around here, you won't be saying I'm waiting for the price of the pounds against the dollar to get to 1.35 uh 1.35318 before I sell. Okay, you could actually say from current price, I'm waiting for the market to get to about 25 pips, then I short the market. Okay, these are the ways forex traders speak. Okay, these are the ways forex traders, someone can actually tell you, hey bro, I'm actually going short on the pounds dollar. Okay, my stop loss should be around 15 pips. Okay, and my take profit should be around 45 pips. Okay, if you don't actually understand this terminology, it could actually slip by you. Okay, these are this amount of pips or this amount of money you could actually make from this move here could actually slip by you if you don't understand the market terminologies, if you don't understand the language of the market. Okay, so that's why it's very, very important you understand the language of every um, market. Okay, for instance, now let's say you come into uh, okay, let's say you go to France, okay, for instance, and they're actually speaking French there, okay, and you are speaking English, okay, you won't actually meet up 100%. Okay, let's say the only language they speak there is just French, okay, and you come in and you are speaking English, you won't be able to easily communicate. Even if someone tells you, please don't go through this route, it's very dangerous, but because you don't understand the language of the people, you will not actually get what the person is actually trying to communicate to you. I don't know if you understand me. If you're following me, just type in the chat section, I'm following. Let me know who is following me. Yeah, let me know who is actually with me. If you understand what I just said right now, just type in the chat section, I understand, or I'm following. Okay, following. Let me get 5. Okay, I'm following. All right, following. All right. 2 more on our kicking. All right, so let's go. All right, so if you don't actually understand the language of the people, you won't get to understand what they're actually trying to tell you. Okay, so just like the market, the forex market here, if you don't understand that this market is actually going to go down from this point, you may lose a very valuable amount of pips, okay, which will at the end result to money loss. Okay, so for instance, now I call a signal and tell you, I see that the market is actually going bullish, okay, but I'm waiting for the market to hit a particular support or resistance level or a zone, and I'm going to short this market from this particular point. Based on what I'm actually currently seeing now, I think my broker is having a very wide spread of about 4 pips, okay, but despite, I'm actually going to put my stop loss about 30 pips so that I can actually cover up for those pillages, okay, which will actually be held overnight. All right, so my stop loss will actually be 30 pips and my take profit will actually be 60 pips. All right, all this whole grammar here I just spoke now is just trying to say I'm going to wait for the market to get to maybe this support or resistance level, okay, and I'm going to sell the market from that point. Okay, because I'm going to hold this trade overnight, okay, and my broker is actually going to have a very wide spread overnight. Will actually give extra 4 pips because of the spread, overnight spread, to cover up so that my stop loss doesn't get triggered. So I'm going to keep my stop loss at 30 pips instead of 25 pips, and my take profit at 60 pips. Okay, so my order will be something like this. This will be the way my order will look like. Um, from current price, my profit level will be 600. Yeah, this is 600 points, not pips. This is 600 points. Why? Because it's actually calculated with the point, not the pips. Okay, and now I'll be using 300 points. Okay, so this is the way my order will be if I'm actually going to hold the trade overnight, because in the next 1 or 2 hours, when the day when the daily candle is going to close, the spread will actually increase. So if I'm expecting the market to drop from this point, okay, because of overnight, I should be expecting the market to come here. Okay, let me do this. So I'll be expecting the market to do something like this because of the spread. Okay, because of the spread overnight. All right, so that's just the way it is. So uh now let's break these terminologies individually. All right, so what's a peep? Okay, what's a peep? All right, a peep, okay, short for what? Percentage in points or price interest points. Now let's not get this confused. Right, what it simply means is, now every single market, now for instance, now you want to exchange the dollar for the pounds, or the pounds for the dollar, whatsoever. Now let's take a look at this right hand part on my screen here. Look at this right hand part. I don't know if you can see my cursor. If you can see my cursor, just type on the chat button. You can see my cursor. Yeah, you can see. Just one person, let me know. You can see. Okay, someone is raising his hand. All right. Okay, so um okay, so now this is my cursor here. So let's say, for instance, now the market pounds currently is at 1.35115. Okay, don't mind the way my writing is. 1.35115. Okay, so now once there's a change, okay, once there's a change, now this is pipette. We don't count this except we want to use points. Okay, if we're using points, we count every single thing, the 5 decimal points. Okay, but if we're using pips, pips starts from the 4th decimal point. So if you're using pips, this is what we're actually interested in. Okay, this is what we're interested in. All right, you're raising up your hand. It seems as if you want to say something. You can type it on the chat box if it's actually a question, and I'll respond to it. Okay, so now these are pips. So once there's a change in this, if you say your decimal point, you count it from the 4th one after the decimal point. This is 1 point. This is where the point is. 3512 or 115. So this is where the pip starts from. Okay, this is where the pip starts from. Now let me clean this. So this is where the pips actually start from. So after the 4th digit after the decimal point is the pip. So this 5th one is what? Pipettes. All right, so the 5th one is pipette, and the 4th one is pip. So once there's a change in this, let's say from 3511 to 3512, we can say the market has changed 3512 by how many pips? Who can tell me how many pips the market did change? How many pips did the market change? By how many pips did the market change? If the market changed from 3511 to 3512, how many pips was that? All right, the market did change by 1 pips. Exactly. So the market changed by 1 pip from 3511 to 3512. How you get the math is you do your calculation from this very point, 3 divided by 3, 0, 5, 5, 1, 1. Then the difference between 1 and 2 is just 1. So the market changed by 1 pip. Okay, so that's it. You are still raising up your hand, Mr. Karim. Ask your question. You can unmute yourself and ask your question, or just drop it on the chat box if it's very important. All right, so now let me clean this whole stuff, then we forge ahead. Okay, so now we have what? PIP is basically the change in price. So once there's a change in price, that's a change in PIP. Okay, so now we have what? The next one. Okay, it was a mistake, sir. No problem. All right, so a pips is a standardized unit, and it is the smallest amount by which a currency quote can change, just like I explained. Okay, it is usually 0.0001 for US dollar related currency pairs. Now, I can see in most cases some people get this kind of confused. Now, I want to show you guys something. Now look at the right hand side of, I don't know if it's the right hand side of your screen also, but it is the right hand side of my screen. So now look at this part where my cursor is. Now you see the quote price of GBP against the dollar. It's 1.3514 for the current price. Now let's look at the GBP against the yen. All right, you can see it's quite different here. It is 115, okay, 01. All right, what did you notice? Is there anything you noticed about this market? Is there anything you noticed about this market? If you noticed anything, just let me know. If you noticed anything about this, let me know. What did you notice about the dollar? Okay, pounds against dollar and pounds against the yen. Where did the decimal point start from? Okay, the figures are different, quite
In the
obvious.
please can I talk?
Yeah, you can.
In the USD, in the GBP USD, the decimal place is at the second place behind the one, but in the GBP JPY is behind the third number, meaning the 155 came before the decimal place.
Okay, exactly. So now the what it simply means here now is, you see, anything that is after the decimal point is, now let me write it out for you so that you can see it. So now on the pounds against the Japanese yen, GBP JPY, we have 155.016 for current price, and then the GBP, let me go to this guy here so I can get the current price. Okay, so the current price for GBP is 1.35135. Okay, so now comparing these two, we can see that the decimal point is where behind the 3 digits here. What this simply means is that, what this whole story here is saying is that uh one one pounds is equals to 155 Japanese yen. So for you to get £1, you need 155 Japanese yen. Okay, and this, what it simply means here is that for you to get £1, you need $1.35. Okay, so Now the Japanese pairs are quite different from the US related pairs. Okay, and now the pips is actually starting from the second decimal point, not the fourth one, because there's no fourth decimal point here, as you can see. So your pip value start from the second. Okay, now this one is still your pipette. Okay, the last digit is still your pipette, so the pip value start from where? The second decimal point. So this is 1 pip, this is 2 pips, this is three sorry, 1 pips, 10 pips, 100 pips, 1,000, 10,000 pips. Okay, so this is 1 pips, 10, 100, 1,000 and 10,000. All right, it's just similar, but the thing here is that the value actually starts from the second decimal point. So let's forge ahead. If you have any question, just drop it on chat section. Let me quickly attend to it. And now, so let me clear the chart. Assuming you have US Euro, for instance, so let's say Euro USD quote of 0.774. Okay, what this quote means is that for $1 you can buy 0.774 7 euros. Okay, all right, so I think this section will end. I don't think Zoom gives much time like that, but I think we'll be joining back again. So immediately you get disconnected, just rejoin. All right, just rejoin, and then we'll be live. I'll still be here waiting. So let me quickly rush on this. All right, so now what it simply means here now is that if you for you to get 1 euro, or for you to get £1, for instance, here now, you need $135. Sorry, $1.35. Sorry, not 135. $1.35. Okay. With $1.35 currently you can get £1. Okay. So that's what it simply means. So alright, so if the price of the pounds increases by 1 pip, it simply means that there's a change in price. Okay, the price of pounds has actually changed. But on let's say for Google now, for instance, now let's check for the price of pounds. Let's check the price of pounds on Google. You can see before this, you see it $1.35. Right? So now this whole pip value here behind here will actually not be included. Okay, on Google now you won't see $1.35 points whatever, or $1.35132. No, it's not like that. It just sums up to the nearest whole number. Okay, if the market closes at this price now, okay, the market will still pounds will still be $1.35. Okay, until the market closes below 135, let's say 134. Okay, as of last week, when the market was still the market was somewhere around here. Okay, as of on Friday, because this is the entire move for today. Okay, as of Friday, the market was at 134. Friday close was 134 47. Okay, so then you can actually see pounds against the dollar at 1.34. Okay, so it works with actually the daily close or weekly close, as the case may be. Okay, it works with weekly close. So let me check out for uh the close of the week on the pounds. Okay, the close of the week of the previous week on the pound. So the pounds closed at 113 133. Okay, that was where the pounds closed. The market just opened this new week, and this is the whole ride for this new week. This new week has been bullish so far. Okay, this new week has been bullish so far because this is just Monday. All right, this is Monday, a new week, a new month. Okay, so this whole bullish candle here, as you can see, might just be what? A week. Okay, it might just be a week. And what a week simply means is that price rejection. Okay, something like this. Okay, this whole candle previously was a massive bullish candle that was something like this. a fully bodied bullish candle and later closed bearish. Okay, later closed to the downside, right? So this entire move now may just be a week, okay, something like this, right? And may before the end of the week close down bearish, right? So we won't actually judge, okay, we won't actually judge, we just wait and see for the reaction of the market, which will actually lead us into technical analysis in our forthcoming classes. All right, so basically I just want to do an introduction, okay, an introduction, and so to basically forex trading. So basically tomorrow we'll take our time and start earlier. We'll take our time, start earlier, and then I think we'll be using Google Meet. Okay, this Zoom was a bit impromptu. All right, we'll be making use of Google Meet. So if you don't have the Google Meet, I think we'll be sending the link on the platform. You can go ahead and download this. It's totally free. Right, you can download it or just click on the link and you get access to the meeting. Right, so we can get access to unlimited time compared to the Zoom platform. Right, Zoom just gives about 40 minutes or thereabout. So now spread. Now basically, this is where your broker makes money from. Okay, this is where your broker makes money from. Whenever someone tells you my broker is bad, what the person is basically complaining is either two things: the spread or the withdrawal. Okay, the person is either complaining of what, the spread or the withdrawal process. Maybe the withdrawal is slow or maybe the spread is high. Okay, I have some brokers I knew in time past that really had very bad spreads. Okay, so I don't actually be calling out names, but the broker I personally use is XNext. Okay, that's the broker I make use of just for forex alone. Okay, so also Bitcoin, crypto, and the rest, Ethereum. You can trade Ethereum on XNext. Okay, so and they are very very reliable, very good withdrawal speed, and the rest. So now spread. Okay, the spread is the difference between the bid and ask. Okay, bid, ask. These are, and you see now this is actually leading us to another terminology, as you can see listed here. Okay, you can see the spread, you can see the bid and ask. These are two different terminologies. All right, so now you can see that one of these terminology is leading us into two different terminologies. So the spread is the difference between the bid and the ask price. Now for instance, now you go to a store and you want to get a laptop or a mobile phone, for instance. Now you go there and you tell them, I want to get maybe the iPhone 13, and they tell you is 100 $1,500. Okay, that's the bid price. Okay, that's the asking price. That's the asking price. Sorry. So now it's left for you to actually bid on it. Okay, it's left for you to actually say, okay, can I get it for 1,450, or can I get it for 1,4 or 1,350, as the case may be. Okay, so now once you guys come to an agreement, okay, you sell at either the ask price or the bid price. Okay, so if the seller tells you no, I'm not going below my price, okay, this is the asking price. Okay, I'm not going below the asking price. All right, if you have any option, you may decide to leave, or if you are still interested, you purchase it. Okay, but as a buyer, you can come in with your own price to bid for that particular item. Okay, so that is okay. Now this difference is the spread you pay when making your trade. Okay, this is crucial for you to understand because each market and forex pair will have huge varying spread. Okay, there are very large spreads when it comes to exotic pairs. Okay, like the ZAR, uh, the BAT, and whatever, Singapore dollars, okay, SGD, and whatever. So those currency pairs are exotic pairs. They come with very high spread. Okay, I don't trade exotic pairs. Okay, I just stick with very few pairs, pounds, dollar, pounds, yen, gold, USD card, USD JPY. USD JPY, USD card are for very rare cases. Okay, what I day trade basically is the pounds, dollar, pounds, yen, and gold. Okay, so now the spread can severely cut into your trading profit or loss depending on a number of factors. And now, for instance, now you are in a trade, you are buying or you are selling, okay, and your spread is about 2 pips, okay, and you're using one standard. By default, even if the trade runs against you, $20 goes out of your account for your broker by default. Right? I'll be ending this meeting now. Just use the link again to join, okay?